Hello traders, Gary Wagner here, approximately 12 noon in Honolulu, Hawaii, the 21st day of September, Wednesday, and this is the daily report for gold. Gold under substantial pressure this morning, giving back pretty much what we saw in gains yesterday. We have major commodities across the board down, equities across the board down, dollar up substantially, and of course precious metals also down. Once again, and this is obviously happening too often, we are experiencing basically a global economic meltdown of sorts. This in response to Ben Bernanke, our Federal Reserve Chairman. When he came out, he first downgraded his economic outlook, and then when he talked about the stimulus package that he planned to implement, he talked about initiating a treasury buying program, and that would of course be an attempt to keep the longer term rates down and thereby giving a lift to the housing issues and crisis that we have here in the States. Traders, it looks like we are coming off the lows just a little bit, currently trading 1782.83. It has been trending a little bit higher. We are currently looking at a 120-minute candlestick chart. It's a candlestick chart that we have been using to talk about the type of correction that we're witnessing, and it's my belief currently that we are experiencing what's called a flat top and an ascending bottom. One thing I think you can see quite clearly, of course, is the fact that this market, as it came down, touched upon but didn't really break hard or even through this lower channel line. Now, as you can see, this channel line has held. I'm going to go ahead and blow that up for us, traders, so that we can really get a closer vantage or viewpoint. And of course, what you'll see is that line does disappear in this scale, but we can re-enter it because we know that we're really going from this low to this low right here is really one of the parameters of that channel line itself. And as you can see, the market traded to but not at. And in terms of lows, we are, if it holds this area, we have received a higher low. The issue, though, is that we did not get a higher high, as you can see right here. As I said yesterday, to me, it is very important that we take out this former top right here if we're going to be actually entering a marketplace that's going to go back into an uptrend. Traders, for the last chart of the day, I do want to look at, this is a Heikin Ashi, a Japanese average chart. It is 480 minutes in length. And what you can see is really over these last couple of trading days, we have had this alternation of red and green, and it's really showing us that we are in a very, very tight trading band. On the high side at about 1821 to 25, that's where resistance is. Support, though, has been moving up. And so just as in a macro level, we are getting this flat top ascending bottom, in a micro level, it does appear that we are also. At the same time, it, at least on a tentative basis, at least for now, traders, it is holding this support line. Again, trading off the lows, knee-jerk reaction, but a knee-jerk reaction that's actually well-founded in the way that the Fed is stimulating the economy. We will have to see how this pans out, what happens in Europe over the next 24 to 48 hours. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow. Bye-bye.